The Australian dollar is trapped in the tightest range we've seen all month, 0.6916 to 0.6976. And 90% of traders are about to get chopped up trying to trade the middle. There is one danger zone and one hidden opportunity right now. I'll show you both. Here's the setup. Price is sitting at 0.6936 as we speak. The 200-day SMA is at 0.6878. The 38.2% Fibonacci retracement sits at 0.6951. And between those two levels? A 70-pip no man's land where retail traders are getting slaughtered. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Here's my session bias. Range bound with a bearish tilt, but the bullish structure is still intact. This is not a trending market. This is a compression coil that's about to snap. The single invalidation level that flips this entire bias? 0.6878. Write this number down. If we break and close below the 200-day SMA at 0.6878 today, the entire bullish structure from the November 2025 to May 2026 rally resets. We are looking at 0.6747 as the next target. That's the 61.8% Fibonacci retracement on the flip side. If we break above 0.6951 with conviction, the 23.6% Fibonacci retracement at 0.7077 becomes the magnet. Here's where the herd is positioned. Large speculators just pushed their net short exposure to a 30-week high of 25,200 contracts. That's a 7,000 contract increase in just 1 week. But here's the kicker. That move was driven primarily by a reduction in long positions, not a surge in fresh short selling. The bears are in control, but they're not exactly screaming conviction, and that, right there, is where the opportunity lives. Let's read the chart from the top down. Weekly time frame. The monthly trend is flashing strong buy. But the weekly trend? Sell. This is a classic higher time frame conflict. The monthly wants higher, the weekly wants lower. That's why we are range bound. The weekly MACD is still negative. Momentum is fading. Daily chart, neutral bias. Price is trading above the 200-day SMA at 0.6878 and the 50% Fibonacci retracement of the November 2025 to May 2026 rally at 0.6849. That's the structural defense line. But here's what worries me. The RSI is stuck around 42. That's not oversold. That's not bullish momentum. That's exhaustion. And the repeated failures to break and hold above 0.6951? That's daily supply. That's sellers stepping in every single time price tries to rally. 4-hour chart. Strong sell. This is where the near-term pressure is coming from. Price broke below the rising 100-hour moving average during the Asian session. That's a modest shift in short-term bias. The 200-hour moving average at 0.72135 is irrelevant at these levels. We are trading well below it. The 4H MACD is negative at minus 0.003. Momentum is fading fast. 1-hour chart. Strong sell. Same story. Short-term sellers are in control. Now let's talk about the levels that actually matter. Support 1 is at 0.6932. That's the session low we just tapped. Support 2 is 0.6923, the bottom of the July range. Support 3 is 0.6914, the absolute range floor. Resistance 1 is 0.6950. That's the 38.2% Fibonacci level and the line in the sand. Resistance 2 is 0.6959, the mid-range rejection zone. Resistance 3 is 0.6968, the top of the recent range. The pivot point sits at 0.6941. And right now, we are trading just below it at 0.6936. That's bearish positioning for the session. Here's what most traders miss. The MACD histogram is still marginally positive on the daily. That's a mild recovery signal. The momentum hasn't fully rolled over yet. So while the short-term bias is bearish, the medium-term structure is still defending the upside. This is a range. And in a range, the money is made at the edges, not in the middle. Now let's connect the dots on what's actually moving this pair. Over the weekend, the US and Iran launched a new round of strikes. The US Central Command hit Iranian targets, and the Islamic Revolutionary Guard Corps retaliated with drone and missile assaults on American allies across the Middle East. The Strait of Hormuz is effectively blockaded. Crude oil spiked. And that revived inflationary concerns, pushing Fed rate hike bets to 90%. That's the USD bid. That's why the Australian dollar is under pressure. But here's the counterweight. The RBA has already hiked 3 times this year to 4.35%. Assistant Governor Sarah Hunter warned last week that the board will act as needed to return inflation to target, and that tightening may be required. If the oil shock lifts inflation expectations, markets are pricing 19% odds of another 25 basis point hike in August. So we have a tug-of-war. Fed hike bet supporting the dollar, RBA hawkishness supporting the Aussie. Then there's China, Australia's largest trading partner. China's Q2 GDP drops this week, along with trade balance data. Any weakness there? That's AUD negative. Any upside surprise? That's AUD positive. The market is sleeping on China data right now. That's an opportunity. The 1 to 2 week directional lean? Bearish below 0.6951, bullish above. The event that invalidates this entire setup? Tuesday's US CPI report. If CPI comes in hot, the USD rallies and Australian dollar to US dollar breaks below 0.6878. If CPI softens, the USD sells off and we test 0.7077. Do you think the dollar breaks 105 this week? Comment yes or no. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I'm giving you 3 setups. 2 scalps. 1 swing. All with exact entries, stops, and targets. Strategy 1. The opening scalp, scalping, high probability. This is a 5-minute structural trigger right at the key intraday support. We are looking for price to tap 0.6923. That's the S2 level and the bottom of the July range. When price touches that level and prints a bullish engulfing candle on the 5-minute chart, we enter long, exact trigger condition. 5-minute candle closes above 0.6925 with a bullish engulfing pattern after tapping 0.6923 entry, 0.6925. Confirmation of the reversal, stop loss, 0.6914, just below the range floor. That's 11 pips of risk. Take profit 1, 0.6941, the pivot point. That's a 16 pip move, 1.45 to 1 risk reward. Take profit 2, 0.6950, the 38.2% Fibonacci resistance. That's a 25 pip move, 2.27 to 1 risk reward. What instantly voids the scalp? A 5-minute candle closes below 0.6914. That breaks the range floor. The thesis is dead. The opening SCLP entry, 0.6925, 5M bullish engulfing after tap of 0.6923, stop loss, 0.6914. Take profit 1, 0.6941. Take profit 2, 0.6950 risk, reward, 1:2.3 invalidation. Void if 5M candle closes below 0.6914. Strategy 2. The liquidity grab, scalping, counter noise. This one's for the fast money traders. We are hunting a stop run above 0.6951. Here's the play. Retail stops are stacked above 0.6951. That's the 38.2% Fibonacci level that price has rejected multiple times. The institutions know this. They'll run those stops, grab the liquidity, then reverse setup. Price spikes above 0.6951, triggers the stops, then prints a bearish rejection candle on the 15-minute chart, a long upper wick, closing back below 0.6950. Entry, 0.6948, on the snapback below 0.6950 after the fake breakout, stop loss, 0.6963, just above the wick. That's 15 pips of risk. Target, 0.6923, the S2 level and the bottom of the range. That's a 25 pip move, 1.67 to 1 risk reward. Warning. This requires fast execution. The fake breakout can happen in minutes. If you're not watching the 15-minute chart in real time, this one's not for you. The liquidity GRAB entry, 0.6948, 15M rejection below 0.6950 after fake breakout above 0.6951, stop loss. 0.6963 take profit 1. 0.6923 risk, reward. 1:1.7 are invalidation. Void if 15M candle closes above 0.6963. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3. The session swing, trend alignment. This is the big one. The multi-session move based on the 4-hour and daily bias. We are looking for a 4-hour close above the 60-period moving average on the 4-hour chart. The 60 MA on 4H is currently around 0.6955. That's the resistance zone. If price closes above that with a bullish MACD cross, we are going long for the swing trigger condition. 4H candle closes above 0.6955 with MACD histogram turning positive. Entry 0.6955 on the 4H close confirmation. Stop loss 0.6878 below the 200-day SMA. That's 77 pips of risk. Wide stop, but that's the structural invalidation level. Take profit 1. 0.7077, the 23.6% Fibonacci retracement. That's a 122 pip move, 1.58 to 1 risk reward. Take profit 2. 0.7120, the next structural resistance. That's a 165 pip move, 2.14 to 1 risk reward. Trailing stop rule. Once price reaches halfway to TP1, around 0.7016, move stop to break even at 0.6955. Let the trade run with no risk. Explicit invalidation level, a daily close below 0.6878. That breaks the 200-day SMA and the 50% Fibonacci retracement. If that happens, the medium-term outlook shifts bearish and we are looking at 0.6747. The session SRNG entry, 0.6955, for H close above 60 MA with bullish MACD cross, stop loss, 0.6878 take profit 1, 0.7077 take profit 2, 0.7120 risk, reward, 1:2.1 are invalidation. Void if daily close below 0.6878. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. I'm risking 0.5% on those. No positions through high impact news. And tomorrow's US CPI is exactly that kind of event. Stops are non-negotiable. This is how you survive to trade the next big move. Let's summarize the single most critical level for the next session. 0.6951. Below that, we are bearish. We are looking for the 200-day SMA at 0.6878 to hold, and if it doesn't, we are free falling to 0.6747. Above that, we are bullish. We are running to 0.7077. Tomorrow's focus is US CPI. That's the event that breaks this range. If this level breaks, the whole monthly trend flips. I'll have the updated blueprint 24 hours from now if you want the full breakdown on trading commodities, the Japanese yen, the euro, and Bitcoin. The videos are live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.